Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to the Monday section of Wealth Matters podcast. Hope all of you are having a great day today. Hope you guys had a nice weekend. I want to talk about Robo Advisors today. What is a Robo Advisor? And again, I took this definition from internet. So Robo Advisors are digital platforms that provide automated, algorithm-driven financial planning services with little to no human supervision, right? So it's like when you go to your financial planner and you mention, I want to be conservative, I want to be semi-aggressive, I want to be aggressive or high growth, then they usually allocate your money to different type of stocks, to mutual funds, to bonds, etc. Whereas Robo Advisors does that automatically because there is AI, artificial intelligence, there is algorithm, software code built in, and it basically balances your portfolio or reallocates the asset, right? So the best Robo Advisors offer easy account setup, right? Easy goal planning, account services, portfolio management, etc. And of course, they should also have security features, great customer service, right? Because all of this is happening using AI. But if you have a question, they should have pretty good customer service, comprehensive education, as well as low fees, because they don't have portfolio manager or financial planners working one-on-one with the clients, right? So once, of course, they have solid software developers, they should have solid code base. But other than that, everything should be pretty much automated, right? So they often automate and optimize passive indexing strategies based on modern portfolio theory. They are inexpensive and require low opening balances, making them available to almost all types of investors. Basically, in a Robo Advisor, you can select different investment accounts based on your needs, just as you would with a traditional financial advisor, right? But in addition to taxable investment accounts, most Robo Advisors also offer tax advantage accounts now, such as IRAs, 401ks, etc., etc. Robo investments do not include day trading, as far as I know. Of course, there are other day trading platforms out there now. So you can buy individual stocks, since Robo Advisor algorithms are based on purchasing diversified asset classes, like usually ETFs and index funds and maybe some mutual funds, etc. And these Robo Advisors are also regulated by the U.S. Securities and Exchange Commission, SEC, just like any other type of financial advisor. How do actually these Robo Advisors work? The algorithm built into Robo Advisors are based on a set of rules related to asset prices, timing, and other variables. So basically, when you sign up for Robo Advisor, you start by filling out a questionnaire about your finances and future goals, etc., etc. You'll also mention what you are saving for, such as retirement, education, or just investing, right? And you will also have to provide your contribution amount, timeline, risk tolerance, etc. So once all of that is provided, the Robo Advisor looks at the personalized investment strategy and makes a recommendation of portfolio for asset allocations. And then you can also set up automatic contributions. You can watch that your portfolio gets rebalanced every week, every month, quarterly, depending on how the market is moving, right? You can also update your financial goals as life changes, right? Someone gets married, someone may have kids, or they are retiring. So all of this pretty much seems much better than going with a traditional financial planner. They also should be able to do, they should have low fees, like about 0.25% of managed asset automatic rebalancing, low account minimum. Also, they should have tax loss harvesting, right? So all of this sounds good, and a lot of people want to jump on it. I had tried some as well, and I'm not trying to review any of the robo advisors today, but just wanted to give you guys an idea about robo advisors and some of the top robo advisors I looked up right before recording this podcast. So I'll talk about them. So the one robo advisor I have tried is Betterment. Again, I didn't do a lot of research into them, but so far they have been working, and they are supposed to be the top robo advisor right now in US. There is also Sophie, SOFI, of course, the Betterment, as I mentioned, Vanguard Digital Advisor. There is Wealthfront. So that, of course, E-Trades, Fidelity Go, SigFig. There are a lot of others as well. Morgan Stanley, Schwab, they, Merrill Edge, Exos Invest. They all have their own robo advisor as well. Wells Fargo has something called Intuitive Investor, LE Invest Managed Portfolios. Personal Capital has it, Capital One Investing. So there are tons of robo advisors out there. In the top ones, as I mentioned, I have mostly heard a lot about Betterment and Wealthfront, and Betterment is one which I have tried. Also, there is another one is Sophie Invest. That's supposed to be really good. And of course, if you are with Charles Schwab or Merrill Edge or Fidelity, they also have their own. E-Trade also have something called E-Trade Core Portfolios. So there are lots of robo advisors out there, but what I have been learning about them, that they also get out of business a lot. Also, a lot of these robo advisors fail a lot as well because of the less fees, etc. I think the Betterment and Wealthfront looks like they will stay, but there used to be something, and which I had researched, I think about 4 years ago, called Motif, MOTIF, Motif Investing, and they just failed as well. So Motif was founded in 2010 by Tariq and Hardeep, a former executive at Microsoft. And the idea was to give individual investors access to a basket of stocks that were grouped together in themes or motives, right? So technology, these, that. Their idea also leveraged AI and big data to identify trends and dynamically build new motives to take advantage of them. Tariq left Motif in 2013 to find a data-driven benefits platform called Lumiti. Motif stayed in business for a decade and attracted over 350,000 customers, but it wasn't enough. Back in, I think, around April 2020, Motif announced that they were shutting down and all customer accounts were being transferred to Folio Institutional. So that's pretty interesting. This was right after pandemic started. What we understood that after taking in over 126 million in venture capital funding, Motif only managed to gather 18 million in investor assets. So that's not the trajectory anyone want to be in. They did get some traction on the institutional side with their Motif Capital Management, which pulled in 586 million from banks and 260 some million from Goldman ETF models. A small asset manager that was bootstrapped by their founders might have been able to muddle through at this asset level, but one that took 126 million from VCs would have difficulty in surviving. So this is why you want to be very careful about which robo advisor you go with as well. I am guessing that either Hardeep Walia had run out of money, or he realized that he wasn't getting any traction and decided to close and return whatever funds he had left. Why did Motif close when robo advisors have been pulling in assets hand over fist during the coronavirus crisis? And there were a couple of people who mentioned one is Robinhood effect killed them. But I would say not only just Robinhood, a lot of could be a swap effect, or it could be an E-Trade effect, because a lot of the platforms stopped charging for commission. They pretty much dropped all trading commissions in 2019. So now Motif was a cross between Robo Advisor and DIY investing platforms like Robinhood, and investors couldn't understand their value, right? Because if I'm able to trade for free on Robinhood to Schwab to Fidelity to E-Trade, why would I try to pick a theme and why do I have to even go through Motif to do this kind of investment? So this is why I think Motif failed. But there are, as I mentioned, market leaders. There are still there, Cons, Betterment, Wealthfront, Bloom. There is all. If I have not mentioned, there is Wealth Simple. There are some new ones coming. Ali Invest, Asset Builder, Clarity Money by Goldman Sachs, Liftoff, Market Riders, Open Invest, TIAA Personal Portfolio, Twine, TWINE, Zacks Advantage. So these are some of, and these are some interesting ones are Elm Partners, ELM, Financial Guard, FinHabits, so like Financial Habits, Interactive Advisors, M1 Finance, and SigFig, Sustain Folio. So I have actually been through a lot of this, and I just never caught on to any of those. But I would highly recommend, if you believe in stock market and you don't want to pick stocks, then go look at some of these Robo Advisors, but make sure that they are pretty solid. They have solid business model as well, because you want them to survive when the difficult times arrive. So thank you for listening, and thank you for watching. Let me know what you guys think of this episode, because I always am exploring different investment opportunities, different platforms as well. So if you have any idea, please let me know, and I will try to cover it next. Take care.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!